I don't pretend to be a fundamental trader, but in your fundamental analysis, it's absolutely critical that whatever you're doing, you're looking ahead towards what constitutes expectation for interest rates. That's all you need to know about fundamentals with regards to currency, is what is going to generate yield and what do people anticipate to generate yield and generate interest rate differential. That's all you've got to care about. That's all that drives Forex market fundamentally. Okay, so for today, I would like to continue on with what we've been talking about the last few days. What I'd like to do is just go over our little theory of a fractal market and effectively using 4-hour changes of trend. The whole thinking here is we're going to watch our daily trend with our 4-hour change of trend as basically our trade signals. Then we're going to use 15-minute price action confirmation to confirm the changes of trend at our respective turning points on the longer-term charts, much like the pound and Aussie trades today. All right, those of you that, I don't know how many of you are able to how many of you caught my little video today, but we talked about a 15-minute change of trend somewhere around 106.70 on the Aussie. Why? Because it's that daily resistance, and you need the 15 minutes to help you define a stop and blah, 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 right? Hasn't made a million pips, but the methodology remains the same. I would also like to start introducing some semblance of money management. How are we treating these longer-term trades? What are we constituting as a spot trade? What trades are we going to spot and scalp? What trades are we going to try to hold on to? A lot of people concentrate on the entry, but really, in my very humble opinion, exit is exponentially more important than any entry you'll ever take in Forex. We've got to have an idea of when you're in a trade, how are you going to work with it? That's what I'd like to talk to today. What EMAs do I use? I use a 5 EMA, an 8 SMA, 21 EMA, a 55, and a 200. But really, the moving averages, I can take them off and be just as happy. Without some idea of where you're trying to take a trade, you cannot work out your risk reward. And frankly, when you walk into a market that's already moved, unless you have an idea of where you want to take that, how are you taking a continuation trade? In other words, if you don't have an idea as to where the trade could go or what it's come off of, what are you doing even trying to take that trade? You know, when you look at your charts, you've got to understand that you look in history, right? You're not looking at future price action necessarily. But let's just talk about some general money management rules here. All you're worried about and concerned about as a newbie is where's the entry? Where should I buy it? Where should I sell it? Yes, timing your entries is important. Getting a directional entry is important, but really trying to work out your exits is more important in my opinion. And if any of you have been involved in any kind of automation development, you know, trying to develop a robot, you'll find that too. It'll put you in a lot of good trades, but the real challenge to make it profitable is how are you staying in those trades and how you're cutting the losing trades quickly. So let's have a look at some things. We've got a daily chart, a 4-hour chart, and a 15-minute. Everybody is clued in as to what the difference is between a spot trade and a swing trade. A spot trade is basically, by definition, we're going to settle the trade on the spot. So basically, we're trying to take it 40, 50 pips out of it. We're trying to take it from the latest resistance to the next level of support and get the heck out of Dodge. And a swing trade is a trade where you're trying to hold on to 2-3 days, and basically you're trying to take it from sort of 1 4-hour fib retracement to a 4-hour fib extension. So you're trying to make 250 pips. You've got to know when to pick your battles with the swing trades versus spot trades. Otherwise, you're going to watch a whole lot of unrealized profit get swallowed up. If you have a daily chart that's down, a 4-hour chart up, and a 15-minute chart up, what type of trade should you be attempting? A spot trade or a swing trade? A spot trade, right? Because the daily trend is down, the 4-hour chart is up, and the 15-minute chart is up. So all this means is that basically you're retracing back to a sell point on the daily. All right, so you're going back to resistance. So this would be a spot trade. When you're against the daily trend, generally you get large extensions and large retracements. So you're going to get back a lot of unrealized profit. Now what happens if you got this? Daily down, 4-hour down, 15-minute up. What trade are you attempting now? Right, now you're looking for a swing entry. Basically, it means that you're probably making a fib, move fib on the 15-minute, and you're going to effectively be this will effectively be a 4-hour swing trade you're attempting. So you're going to look to swing trade this. So your daily might be doing something like this, and your 4-hour might be doing sort of something like this. All right, so your 4-hour might be in this position on the daily, and your 15-minute is basically tacking up to that level. So when you short that 15-minute, when you're looking to short this, the 15-minute is going to be against the 4-hour and daily prevailing trend. So you're going to wait for your 15-minute to roll over, and you're going to basically attempt a swing trade, something that you can hold on to for a day or two and try and make a couple hundred pips. I use price action, so I just use trend definition. A move trade is something, basically it's this. If you've got, say, your pivots like this, and you have, so this might be M1 and S2 like this. Price will come down, hit S2, go back up to M1, and then fall through the floor. Way back when, Wayne used to say, well, when you come off M1 and break S2, look to sell until the cows come home. Now what we're going to do is we're going to trade our respective methodology, right? Trading in alignment with the daily chart, the 4-hour, using our 15-minute for confirmation on different things. And we're going to effectively spot trade when the 4-hour and 15-minute are lined up. We're going to try swing trade when the daily and the 4-hour is lined up. However, our execution for these trades is going to be on a 15-minute. The swing trades are going to have the 15-minute price action risk exposure to try to capture the longer-term stuff. So if we look at this daily chart, what is the prevailing trend? It's not exactly ripping. It's down, right? You're making a series of lower lows and lower highs, and you're coming off a move fib of the drop, and now it's effectively making a swing fib. So no reason to think anything other than short until it's broken this level, because that would then effectively give you a double bottom and a major break of the high and a change of trend. Well, you don't know, Abel. You don't know. But here's the thing with trading. As long as it's in a downtrend, you've got to assume that it's going to continue. Right? That's it. You've got to assume the resistance is going to hold. Otherwise, you'll drive yourself crazy. Oh, I think it's going to break. No, it's not going to break. Oh, I think it's going to break. No, it's not. You'll drive yourself demented. You just got to assume that it's going to hold. The 4-hour just changed trend back to the upside, didn't it? Would you agree with that? 4-hour just changed trend to the upside. Daily still to the downside and at resistance. So in effect here, we can look for a little short up here, which takes us down. However, we're going to find longs on this 4-hour through here, aren't we? I'm actually considering just scrolling back and covering some of this with you so we can trade the chop a little bit. That might be informational by itself. So in other words, you're at daily resistance, 4-hour uptrend. So we've got the 4-hour against the daily, but at resistance. So is there a trade opportunity for us? Yes, there is. What is it? It's a spot trade, short. Excellent. All right, so let's see how it goes. Bear in mind now you have a 4-hour uptrend, so you're going to run into the 4-hour long zone too. You got a little bit of a fight because you have a daily down and a 4-hour up. So now we're getting our 15-minute change of trend. So now we're going to see if we get a little something like this to short us down, and we're going to put a stop up here and see if we can drop that. Okay, if we don't get it, guess what? We're not trading. All right, let's go. A little aggressive for my taste, so I'm probably missing this short. Would have liked to have seen something like this and this one. I know Hotcom's lagging me, but I would have liked to have seen something like that to short. So guess what? I'm no trade yet. Even though it's dropped from where I wanted it to, no trade. Right, now it's heading down towards my buy zone on the upside. So far, no confirmation, no confirmation, no confirmation, and now we're going to pop down to the next level. Now you have a change of trend, 15-minute, agreed. This is a double bottom. This is a break of this is one of our little chart patterns here, isn't it? Okay, so this is one of our chart patterns. This one right here. Okay, you guys see it? That one right there. And it's happening in the context of a 4-hour uptrend at a 618 and previous lows and highs, right? This was obviously a good support area. Okay, so now we're going to look for something like this. Now, is this a spot trade or a swing trade? Spot trade. Spot trade, yes. Spot scalp scenario. Okay, so let's slow this down a little bit. and let's let it rip. Right, so here's a little entry for us. Okay, we're just waiting for this little number here. Little 382, so we'll long that. Where are we shooting for? It's a spot trade, so basically we're just trying to take it from support back to resistance. So effectively, all we're trying to do is take it, kind of back in here. That's it. We're trying to make, 50 pips out of it. Pretty standard spot trade. Right, another opportunity. Dropped down a little further than you would have wanted, but no big deal. Okay, knocked us out of it. That doesn't mean to say the trade will not work. We just took a loss on that one. But we'd do it all over again. That's cool. The first trade we take together is a loss. That's excellent. We're going to long bomb it. Since it's at support, here's even another little confirmation right here. It actually sets up a little bit better because our reward is actually pretty decent. Right, so you get a 15-minute change of trend. I always like to give it the lower low plus 10. Okay, so now we're going to work out our profit point, which is the fib of the drop, which is approximately the 60 to 80 area. Basically back to fib of this drop, so we're talking sort of 64.50-ish. We're trying to take it sort of here. Yeah, lower low plus 10. All right, let's go. Okay, so you have 50 pips, just jam it in there, break even. Right, so it's now hit our target. So what are we doing? Okay, we're going to move our stop basically right underneath price. Why are we doing that? Jam it up there, right? It's a spot trade. We're not trying for anything. The daily is still short. This is the thing that's critical, is that everybody understands, is that this daily is still down. Therefore, we are spot trading. Okay, we are spot trading. The 4-hour is up, but the daily is down. So we do not have a congruent trend at this spot. We've got diverging trends. Therefore, we're spot trading or support and resistance within the context of the 4-hour trend at this point. Now, could this thing do something like this? Maybe. In which case, it would change the trend on the daily, and then we'd start to really think about longs. But it's not yet. The trend is down until it's not down anymore. Okay, so let's go. Right, so the reason why I moved stops like this as opposed to just getting out of it is what happens if it just goes to the roof? Well, then you're still in it. But you've effectively taken profit on the spot trade. All right, so then after that, it's all just bonus territory. Okay, so we get knocked out of it. How did we do in that one? All right, 49 pips, better than a kick in the face. You've run out of direction now a little bit, haven't you? Now I've got higher lows, lower highs. Would you guys reshort this? No. Do I always, I normally just look for confluence areas. Would you guys reshort this considering it's a lower high within the context of the daily downtrend? Remember, lower highs mean continuation in a downtrend. Or would you need more confirmation? A lower high in a downtrend is the confirmation, guys. All right, let's at least wait for the 15-minute to line up. Now the 15 minutes in a downtrend. Now you get a 15-minute change of trend to the downside after a 4-hour lower high at the fib of the drop. We've got a daily chart down, agreed? We've got a 4-hour chart making lower highs directly after coming off a higher low. And we have the 15-minute chart saying down. So we've got a daily down, a 15-minute down, and a lower high on the 4-hour. Are we shorting here? Alex, I'll have shorts for 200, please. I have no idea about time of day. That is an important thing. I just trying to keep it simple for now. Yeah, let's bang a short in here and see what happens. Spot trade, scalp trade, what type of trade and what target are we looking for? Fib extension of this drop takes us to this trend line. It's kind of a spot swing trade. It's a bit of a hybrid. What trade does this remind you of today? That exact setup right there. Cable is this trade. There it is. Here is your double top at a 50% right around market open. And here's your Forex tester. Here's your trade here. Tell me, you think there's sort of any repetition to this? Pretty cool, huh? The funny thing is, the 4-hour chart actually looks pretty similar too. Right, and you are within a stone's throw of support. We'll take our stop loss and move it right above price, effectively taking profit on this. Okay, and we'll let it go. We got clipped, no big deal. No, 67, not bad. Now we're going to look for a trade through here that takes us short, right? And we're going to look for a 15-minute change of trend, and we're going to try and basically trade this thing like this in a swing trade opportunity, aren't we? Pure swing trade, 15-minute change of trend around our 4 hour, because that'll give us daily down, 4-hour down, and prospectively 15-minute rollover. Well, in this case, I just moved it above the 15-minute swing, Martin. 15, 20 pips probably in that case. I mean, the chances of you getting the absolute bottom and the absolute top, good luck with that. So here we are. We're coming up to our short point, right? Now we're looking for our 15-minute change of trend. Nothing so far. Nothing, right? Zilch. No 15-minute change of trend. And we're in sort of the heart of the red zone now. Nothing. Well, hang on a minute. Right. As soon as we get in, my red zones are 382 to 618. So as soon as we start to get into that zone, I initiate trend change mode. I go into all-out trend change mode at that point. Interestingly, now we've got a daily higher low. That's the first component to change a trend on the daily. Is that a change of trend yet, though? No. We have to eclipse this high to confirm a daily change of trend. That'll give us a higher low, higher high scenario. The 382 to 618 fib retracement in English. This would give us a potential trade like that would give us something like this, would effectively give us this chart pattern hypothetically. You know what? I like to use the hourly for intraday continuation. I've just found I haven't been able to sequence it in as effectively as I'd like just for this purpose. But certainly intraday, yes, it's a beautiful thing for playing continuations. Notice how little trading we're doing. We traded one share on the short side. One share on the long side, lost money, traded again on the long side, made a little bit, traded again on the short side. And that was in the space of a week. We traded 3 times. We're starting to try and develop a 4-hour swing. Is it a change of trend on the 4-hour yet? Okay, we're not really doing anything right now. We've got a mixed daily chart, a mixed 4-hour, and a 15 that has no idea what it wants to use. What just happened? All right, you got a 4-hour change of trend here. There it is. You now got a daily speed up candle. And you're trying to look at something like this on your daily chart hypothetically. Redefine the trend to the upside. Yes, that's what we were waiting for, Abel. Yep. Now we can look at doing, now in real life, I would look at taking a 15-minute swing fib like this. I'd look at doing this sort of thing on the 15-minute and just sort of riding that up as far as I can. If we're waiting for the very conservative trade, we're going to wait for this. So here we go. We've got a 4-hour uptrend here, and now we're going to be doing something like this. We're going to initiate long sequence, and your daily's starting to look good, guys. It's just part of it. Waiting is just a big part of it. That's just trading, isn't it? Right, so now we're in our buy zone. So now we're thinking 15-minute change of trend, right? Delta is the sign for 15-minute, or the sign for change. So now we're going to watch for the 15 minutes to start doing a little something like this. Then we're going to knock down that trade. Right, and I love the 50%. Now you're back in this range area, which I see as like an energy point, so to speak. Now, why not just long that? Why not just take that? Why not just buy it? Because your stop is down here. Your stop's down here. So you got 150 pips of risk. Merry Christmas. I'd probably look to short again at around 70. No, we're only trading one direction now, Boyke, because now we've got a daily up and a 4-hour up. So we're now waiting for the 15-minute to confirm the upside, and we're now going to try and swing trade this puppy. Generally, I'll spot trade against the trend and swing with it. As a habit, I try to just stick with trading with the trend as much as possible. Some trades like today, the only trades that were available to us were counter-trend trades relative to the last few days' price action. Some days that's all you're faced with. At resistance, at a market open, you can be whatever trend you want. You're going to go down. Okay, here's our entry. 50-minute change of trend, pullback. This is our time to shine, guys. This is go time. A little early on our entry, nothing crazy. But this is now our first opportunity to manage a swing trade together. Now, how do you manage a swing trade? Mayfos, it really depends what you're defining as the trend on these things. Okay, the entry just now was right here. Okay, we entered on right here was our change of trend on the 15-minute, and we entered right here on the pullback. Okay, so this was our buy point, It went down a little bit lower, but we had a stop 10 pips underneath the lower low. All right, yep, 50, 60 pips in profit, so we went break even. We're going to trail the 4-hour swings. You can trail the 4-hour 5, you can trail the 4-hour swings. In this case, we don't have any moving averages, which I have no regrets about. And now we're going to effectively trail the 4-hour swings until this thing knocks us out. Pretty rudimentary system, yeah? So let's see what happens. Daily, just change trend on the daily. Okay, so now we've got confirmation that we're now in a daily uptrend. You guys see it? So now we all of a sudden go from, all right, thinking shorts to now we're trying to hold longs with the 4-hour confirmed to the upside. We're trying to hold longs and scalp against it when the 4-hour confirms it. That's now the strategy and the money management. Spot trade against it, swing trade with it. Well, I'm going to show you right now, Boyke, let's speed this up. We haven't created a 4-hour swing yet, so we've got nothing to hide our stop below. Now, if you're really aggressive, you can move a stop underneath those lows. At this point, I don't think we move it anyway. I think at this point, we just sit tight. Okay, now we have some defined lows that we can hide our stop behind. Okay, we've just protected about 90 pips or something. Now it's at the sort of the conservative swing target even. Nothing telling us to get out. Daily looking fantastic. Here's your daily chart. Brand new, fresh change of trend. Everything looking awesome. Next to the major level of concern is sort of this level through here on a daily basis. But otherwise, we're looking pretty sexy at this point. Now what you can do is you can continue to swing trade your way up here. So on your 4-hour, you can continue to do this sort of thing. 4-hour green zone. Great. Look for your 15-minute confirmation. Awesome. Here's a new 15-minute uptrend. Excellent. Where's our pullback? Right. Pullback of that. Low stop. Go. Another chart's lagging me. But there's your 15-minute change of trend. Off that level, there's your pullback. Go. And guys, you'll get to learn the sequence of it. And reloading and building a position is important. Right. So now we've created another low. So now we can chug our stop on up there. It can make us, but, that's why you want reloads along the way, frankly, so that you have more flexibility with how you take profit. And there's no perfect way to go about it, frankly. Able, yes. Okay, so we just created another swing. Chug our stop up there a little bit. Right, created another swing. Oh. Right, breaking these highs on the daily chart. By reload, you mean open a new position? Yes. Right, we just got knocked out of it. It's probably not done, but we got popped out of that one, I don't know, 493 pips, 500 pip trade. We spot traded around in the context of conflicting signals and conflicting trends, right? Then when we had congruent in aligned trends, 4-hour and daily, both in alignment with each other, now we go pip hunting heavy. Okay, when they start fighting each other again, once again revert back to scalping around and spot trading around. Okay, that's why at the moment on things like the pound and the Aussie and the euro, I don't think we really have massively established trends or even aligned time frames yet. So I'm just spot trading. I'm taking 50, 60, 70, calling it a day and coming back tomorrow until something new develops. But I hope you got something from this, guys. Any sort of questions? We'll continue tomorrow, and I want to spend sort of a little more time refining our confirmations, sterile environment. But now we've got to start taking this and applying it to the live stuff and thinking ahead of it.